Welcome, everyone. Back by popular demand, we've got Chris Camacho. For those of you who don't know Chris, Chris is a good friend and one of the most impactful business leaders, not only in our community, but also just across the country. Chris is the president and CEO of GPEC. Recently, and I won't get into a ton of accolades, or we'd spend all day doing that, and we've got a limited amount of time, but notably, to Chris's credit and under his leadership, the Greater Phoenix Economic Council was recently awarded the best economic development organization globally, and that was for 2022. So Chris, thank you for being here today in video. I know we wish you could be here in person, and maybe next year we'll get to do that again. But without further ado, Chris, would love to just hear from you. Everyone in the audience, we teed Chris up with a handful of questions. We wanted to talk a little bit about trends in the market, the relocates, how Phoenix is faring kind of competitively, what's going on with water. So those are the things we're going to try to get through today. We've got some slides that we'll hopefully be able to augment this presentation with either now, or we'll send them to you either afterwards in advance. So Chris, thank you so much for being here. If you don't mind, just give us a quick update on how things are trending 2022 to 2023, what's going on with Phoenix and the overall market.
Great. Thanks, Danny and Steve. Thanks for the opportunity to be back again. I wish I could be there with you in person, but as I think you recall, I have a special job to do out at the Open, where we host this year is probably going to be 750,000 people out at the WM Open this week, and also having the Super Bowl on the tail end has created an incredible opportunity for us to showcase the market. We have 200 global executives and venture capitalists coming to Phoenix that we'll be hosting over those few days. So certainly a lot of spotlight on our community, and again, wish I could be there with you, but maybe next year we can do this again. So almost just to give a little bit of color to the year that we've had since we last met, we've had some significant passage of federal legislation that's really prompted significant levels of investment coming not only to Arizona, but the rest of the country. And so seeing the CHIPS Act move forward, which was a $39 billion incentive specifically for companies making investments in chips domestically. But there's also another $11-12 billion available for research and development and innovation capacity, of which we're competing for significant numbers of those dollars. And the CHIPS Act's not only going to strengthen and fortify the domestic position on chip production, but seeing TSMC go through their process. Taiwan Semiconductor is the global leader in advanced chipsets, and they a year ago announced a 5-nanometer facility up in North Phoenix. Initially announced a $10 billion project, and just about I think it was 2 months ago, along with President Biden, I was sitting next to the top 13 global CEOs in the country, in semi, from TSMC to Intel to AMD to Micron. This was everything an economic developer would hope for, is to have global leadership come to your market to talk about how important chips are to the country, and certainly those are going to be manufactured here. So during President Biden's visit, we had the announcement of another $30 billion coming with TSMC. Over time, that'll be 10,000 jobs up in North Phoenix. That's thrown off another 18 companies that we've publicly announced within the supply chain, and everything from capital equipment makers to chemical suppliers and many others that will be induced by TSMC. There's another 20 projects in our pipeline that have not yet been announced, specifically tied on the industrial side to TSMC. And subsequent to that, you had Intel making an announcement of another $20 billion for Fab 42 and 52. So that market is incredibly active right now. We're still competing for a number of other fabs in this market. And as you know, not only do they drive significant amount of greenfield, new version development, but at the same time, the supply chain impacts to those projects are paramount. So you're going to see many other smaller users from 5,000 square feet up to a couple of our projects are a few $100 million investments that are sidecar to TSMC and Intel. In addition to that, since we met, we had a new governor get minted as the head of our state. Governor Katie Hobbs was inaugurated, and I served on her transition team. So what's been great for GPEC is that we've gone from Governor Ducey, a devout commitment to making our market very competitive, and the tax and regulatory climate being very favorable, to now working closely with Governor Hobbs on her strategies on the economy. And just, I always talk inside baseball with you guys, so now I guess I'm on record saying some of this, but what I can tell you is that the Arizona Senate and the leadership of the Senate is very conservative, ideologically bent, very libertarian, which and how that'll play out in politics is, most likely you will see a very divided House and Senate versus what this administration priorities are. And so that'll most likely lead to a stable operating environment. And so as a byproduct of Governor Hobbs' agenda versus intended further tax cuts coming from the Senate, my expectation is that we're going to have a continued balanced approach on taxes and regulatory climate, because nothing major will get done. That would be my guess. And sometimes that's a good thing, particularly in the political arena today. And we'll let the market bear out, the fruits of what we've built over the last decade. We're still seeing significant population growth as well, as you've seen an impact on our market with housing, and I'll talk about that in a second, but 94,000 new residents have come to the market this last year. So we're still climbing a population base, which is now just over 5 million people here in the MSA. That's prompted a pretty unique position for our housing market. We've seen a pretty strong appreciation activity over the last 3 to 4 years. And unlike what you might have read in the Goldman Sachs recent piece, which referenced Phoenix and San Diego and a few other markets destined for a massive downturn, when I look at the supply demand data, one thing that's absolutely not tied to the 2008 major recession that we experienced was back then we had a massive oversupply of product and we had a massive over-leveraged debt position. In today's climate, we have an undersupplied market with a continued demand position. So, we're trying as communities in Metro Phoenix, trying to build more housing stock, both multifamily, single family, et cetera, and we're not able to keep up with the pace of demand. And so even with the Fed increasing short-term rates, the coinciding effect of mortgage rates, just recently we saw a modest decrease in housing values, but not the fall off the slide like many national folks had expected at this time. So again, I still expect jobs coupled with demand continuing to fuel our housing market going forward. Final couple things I'll share too, just to try to wrap this up on the introduction front, is one other key facet to our industrial base is that our manufacturing technology workforce continues to evolve. And so we've built a number of what we call quick start programs within the community college network to really specifically tie into production technician needs within our tier technical roles for everyone from benchmark electronics to array technologies, certainly for TSMC and Intel, but many others. And in addition to that, our engineering school at the Ira Fulton School at ASU is now over 30,000 engineers enrolled. So that's driving a significant constant repopulating of engineering need in our community. And then finally, what all of this kind of critical investment in STEM and investment in infrastructure has yielded is our robust jobs base continues. And in the slides that we can go through here in a moment, you'll see that there's a curtailed GDP growth projection. When the economy nationally is strong, Arizona usually grows at about 2.5% to 3.5%. Many economists are projecting us to be roughly at that 1% GDP growth range, whereas many are projecting the national economy to grow very incrementally or actually slide backwards. So, that's what many economists are saying. I can tell you from our pipeline, we're still seeing a very healthy industrial pipeline today. What is probably markedly different from the last 3 years, which I do feel like we had record-breaking years, kind of looking in the rearview mirror, but we're still seeing a tremendous amount of 25, 50,000 square foot, all the way up to about 250,000 square foot industrial demands. What's different is our large-scale industrial projects, the mega outliers. Because of the debt markets, we're seeing a different kind of trend where companies are investing in smaller projects, smaller meaning like 300,000, not the bombers we've historically seen in the southwest part of our valley. But there's still a lot of distribution, e-commerce activity. But for manufacturing, most of these are in that 50 to 300,000 square foot range. And then finally, on the office front, we see a really mixed bag of office today. So we see some companies are fully RTO. Other tech companies are still in a blended RTO with hybrid work from home. That's certainly played a role in the last 3 years in our office space. There's been a massive shift to quality. So a lot of our urban Class A and even suburban Class A, there's been a rise in lease rates because of that shift to quality. And we've been backfilling a lot of the mid-size Class B with other types of clients in our community. So overall, again, I think we're in a really fortuitous spot, being that Phoenix will continue to have the levers of growth. We'll continue to have modern infrastructure, continue to invest in our education system, and we'll be working with administration that I think will be really beneficial to us going forward, but also not really turning drastically from where we saw the Ducey administration take us. So with that, Danny, maybe I'll pause and we can go through any other questions you might have, and then we can throw up any slides that you'd like.
Yeah, no, I think that's great, Chris. I mean, we talked a little bit about office earlier, and I see maybe just a little bit on 2023 and how that's trending. Look, I look at your numbers and stats, and you're already at 75% of goal for 2023. Do you maybe talk about your fiscal year, when it starts, how you're there? But I think it was really crazy for us to see the performance kind of in 2023, your fiscal year to date, and maybe what are the drivers and what does it look like maybe more on a forward-looking basis?
Yeah, Danny. So if you want to pull up slide 3, I'll talk to it just so the audience gets a visual on this. But you'd see that we're tracking really on par with new prospects being generated, which is a true indication of the general health of a pipeline. What I'll also share is that we're a July 1 through June 30th fiscal year. So these numbers are the first 6 months. We've had a number of new companies announced since December 31st, as you can see in the bottom left, but 22 new enterprises coming from around the world, and that's induced $23 billion of new investment. Yeah, obviously some of that is TSMC, but there's also many other projects in that pipeline. The wages associated with those projects are 85,000 and right around 4,800 jobs. So pretty significant job counts overall. And if you'll fast forward, I just want to go to one other slide, I think, that draws attention to the kinds of companies that we're seeing. If you go to slide 6 here, you will see that we've had a number of international domestic firms decide to come to Arizona for manufacturing and office use. So one thing that's very different from 10 years ago, if those of you that were doing capital markets investing here, you would have seen a tremendous call center market. We've certainly evolved from that identity to bringing companies like you see upper left here as an ag technology firm, shifting their headquarters to Scottsdale. Through the bottom right is Xenergy, which is a Canadian company moving a massive clean tech manufacturing products line to Mesa, Arizona. And then in addition to that, what's not on the screen, because this is only the last quarter's worth of projects. So in any other place across the country, this would probably be enough for the year, but this is just the last quarter's worth, and not all of our projects, but some of the more marquee, interesting ones. And outside of the last quarter, even right outside of our region, companies like Procter & Gamble, Lucid Motors, putting another major manufacturing location here. Pepsi opened up another major distribution hub in the Southwest Valley. And then companies like Nikola Motors, which is a public company in the hydrogen fuel cell space. They're building out a hydrogen campus out in Buckeye, which is west side of Phoenix. So these are the kind of companies that, again, are just illustrative of the activity that we're seeing. We are considered one of those quote unquote hot markets right now with technology job growth, much like Austin, Denver, and Nashville, other places that have had pretty significant housing increases along with technology job growth. And we'll have a seminar coming up in next month referencing the growth of the technology disposition of this region. And it's a pretty telling story in terms of software as a service, cybersecurity, fintech, very tremendous levels of overarching emerging technology activity happening here.
And Chris, I appreciate that. And I know one of the questions that we often get asked, or we have over the years, and I think that narrative is changing a little bit, and you spoke to it, but maybe even speaking to it a little bit more, is, there's people on investment committees and that have been around Phoenix for now decades, and remember the boom-bust nature of the Phoenix market. Could you speak a little bit more to why you might convince someone that that's not the case, or is there still some elements of that?
Yeah, I feel like, my whole, 15 years worth of work in Arizona was to really stem that tide of, the 1980s S&L boom and bust all the way through the 90s tech bust, late 90s tech bust, and the early 2000s growth. Predominantly that was in housing and construction and retail. I feel like this this decade it feels like a century's worth of work, but a decade's worth of work has shifted our market position. And one indicator of that, and there's many, is that we have more manufacturing jobs in Arizona than we have now construction jobs. And that was a pinnacle measurement that we have across aerospace and defense, microelectronics, many food processing. We have more people making things, making goods and exporting those goods than we do building homes. And that's the first time we've reached that clip. And so, when I talk to the new administration, there's so many inputs that go into making sure that we don't slide backwards, that we keep policy in place that induces inward investments for manufacturing, but also supporting the growth base of manufacturing in our market, but also then stimulates the level of output of STEM individuals coming through our P through 20 system. And so I feel like there's a lot of these key ingredients that, again, it's going to take us another 10 years to fully smooth out those edges of boom and bust. But I can tell you, we've been able to manage this last 10 years arguably very well. Governor Ducey came in with $1 billion deficit, left office with a $4 billion surplus. We know that this economic strategy has worked, and we want to make sure it works for all Arizonans. And so, we're going to keep going down this path of people, infrastructure, and quality policy. And I think those are basic, but yet key ingredients to make sure that we're building an economy of the future and throw in some innovation stimulation. And again, I don't think there's anything that's going to stop this place in the next 30 years because of those ingredients that are there.
Is it worth maybe looking at a couple of your slides as you could talk through some of the pipelines, some of the companies that are in the sustainable space, in those things, Chris, just to kind of give some more color to that?
Yeah, you bet. Let's jump to slide 8 here. I'll go 8 and 9 kind of back to back here quickly. So one of the things that we often get asked is, what's dynamic within GPEC's pipeline? So again, you see that overarching prospect number, which sometimes it flexes up to 290, flexes down to 240. It just depends on the time of year and kind of overall national and international economy. But one thing that's markedly changed, so you see here the 240s in the pipeline right now, is that many of these companies, roughly 20+% are from foreign markets. And of those, you see the APAC region representing 20 deals, yet $10 billion of investment. So these are fabs, these are key capital equipment manufacturers that are tied to CHIPS Act, tied to this overarching pivot from where we were in the 1980s of producing 40+% of the chips that we exported to the world. We slid in early 2000s to just over 12%. Certainly our last president and this president are trying to refortify the position for the U.S. market. So what that means, when places have major hubs that already pre-exist, places like Austin or Phoenix or upstate New York or the Northwest, where you have tremendous semiconductor capacity, these global markets keep getting more investment. So that's what you see indicative of those 20 prospects, predominantly out of Taiwan, South Korea, and Japan. And so that's on the left side column. More broadly, our semiconductor pipeline alone is 25 deals, and you can see the CapEx spread on that. Most of these projects in terms of size are much larger in nature, much more capital intensive, but also at a level of complexity relative to energy grid resiliency, water and wastewater usage. And one thing that I'm sure you're all asking yourselves is, for those of you that don't live here, and you've probably seen some of the headlines from Lake Mead and the shortage declaration by Department of Reclamation or the Bureau of Reclamation, referencing our water position. I could spend a whole hour talking about water, but what I can tell you is that only 36% of Arizona's water comes from the Colorado River. So that leaves the remaining balance, 64%, coming from other sources: groundwater, other rivers, other augmentation practices, reuse, which has become very big in our community. So projects like—
Chris, for our audience, do you have a slide on that?
Yeah, I think if we fast forward just a touch, I'll show you a little bit more on this. I think it's slide 13. It'll just give you a color on water in totality. So, 36% is on that far right circled. Most people think that when you see an image of Lake Mead and the reservoir level drop, I'm not downplaying the issue relative to climate change, or it's getting warmer, or this era of aridification that's happening. But we've been planning for water since our inception as a state. Our centennial was in 2012, so we're a little over 100 years old. And yet, when I went back in the history books and looked at all of the major efforts relative to water, from the Hohokams predating our state building canal systems to the investment that President Johnson made to invest in lining the canals, all the way through the Central Arizona project in 1968, to more recently, all the 1980 groundwater management plan, which guarantees an assured 100-year assured water supply for every permit being pulled. So, we've been through this, and certainly we're in a different level of drought today in the last 22 years. But Congress put $4 billion for water in the West into their IRA package. And then you also had another over $1 billion put in by a previous governor to shore up, water augmentation and conservation practices. So what most people don't realize, even though, since the 1950s, we've grown 13x in terms of economics, in terms of GDP growth, or 6x population growth, we're still using 1957 water consumption levels. 72% of that number is tied to agriculture. So I think our next big debate in Arizona is going to be productive ag use versus non-productive ag use, and a leaning out of those water supplies to be able to use for muni and industrial uses. And I know there's a lot here, but I'll share with you is that our industrial use is only 6% of the total, and our muni use is just over that. So it's not, today our water is going to be shifted to its highest and best use over time, while we're continuing to shore up the laws of the river, working with the upper and lower basin states, the 7 states that rely on the Colorado River. So one other final thing too, Danny, because you asked about water, is we have right around 12 million acre feet stored underground, and that'll carry us for almost 2 years if we didn't have any other water sources coming to our state. That alone, just storage that we have in 2 major aquifers here in Phoenix. So we're going to continue to focus on this issue, but it's, again, something I've been very, very active in with many other partners to make sure that we're planning for our water future.
And is it worth discussing and how real anything is with desalination, with what the governor and maybe Michael Crow and others are doing?
So everything that when I talk to the experts within desal, it's, whether it's Mexico or it's California, we're still 10 to 15 years out of that getting done, and or the environmental process, the piping process, even the economics. When you look at desal as an opportunity for Arizonans, we're talking 6 to 10x the cost construct. So I think that down the road that will be a possibility. Certainly desal's been successful in other parts of the world. Some have to by choice. Our water's still here very cheap. And so I think a lot of the market economics will have to change, but also the siting and the environmental process will have to be carried forward. There's going to be tremendous infrastructure improvements in Arizona around Bartlett Lake, which will lead to more significant water availability. The way we move water within our state will also be modernized over the next 10 years. So there's tremendous amounts of new efforts underway or have been underway, and desal will be a piece of the overall pie, but I think that'll be down the road.
Chris, not something we've talked about in a while, but I'm curious to hear your thoughts on just labor. And when you're talking to these prospective locates, maybe, how are you positioning, or how are they viewing labor, and also just education, just in general?
Yeah, I think, I'll start first on your latter point. So education, there's a myriad of different offerings from, public to, so district schools to charter schools. Some of the highest performing district and charter schools are here in Arizona. In addition to that, all the private schools that have been advanced over the last couple decades. I mean, this is certainly a state of choice. There's been an induced movement to enable parents to utilize different mechanisms to have their kids choose which schools they want to go to. So again, we're like any other market. We have some of the best performing schools and some of our our challenging schools that, again, I think we have to tackle those head on. This is and we're doing that. I mean, there's a lot of success stories coming in Title I schools in low income dense areas where we've seen both charter and districts have success based upon modernized curriculums and teacher pay and many other facets. So we obviously have to continue to do much more, but we're not immune, just like every other major market, from those challenges. What's very different, though, I would say in the last decade is the throughput within our community college system. I would characterize as the ace in the hole, whether it's second career individuals or newly minted students going through short-term certification programs, again, around production technology through Series 7. I mean, there's a lot of different kinds of programs that our community college has been very nimble in meeting that demand. And then you toss on top of that, Arizona State University is over 100,000 students today, largest university in the country. But even more than that, it's about the type of student that they're training today, along with Grand Canyon University and University of Arizona, and many others. We're in a really unique position because we're producing a lot of people for the markets. We've been able to grow and scale our technology base along with the manufacturing base, also along with the healthcare and financial services all at the same time. And again, what I mentioned earlier doesn't hurt either. When you have a tailwind of almost 100,000 people coming to your market, over 80% of them working age, that is really where you garner tremendous momentum, because you're able to provide the kind of jobs and quality people for the throughput within the P through 20 system, and at the same time have a tremendous tailwind of new people coming to Arizona for work.
Yeah, and then real quickly, labor. What how's that being viewed by, as we look at our competitive markets? How's Phoenix fare?
Our market, Danny, we compete heavily with, it depends on the operational use, but with Dallas, with Atlanta, Denver, when you're talking about regional headquarters or headquarters, IT offices, engineering offices, and so forth. If you look at the cost differential, you're going to see that we're either in line or below cost of these other top markets from a destination perspective. When you look at the TCO analysis, against Dallas, we're going to be about 10% cheaper, against California, overwhelmingly cheaper. But you still have the quality labor force that these companies demand. If you're looking more at the manufacturing segment, most of that is more hyper-regionalized. So you see Southern Utah, parts of Nevada, certainly California. Against California, it's about a 35% operating cost differential for a manufacturer against the LA basin. So we see a lot of inward pressure from California wanting to certainly exercise Arizona to service the Southern California market. And also a lot of Canadian and Midwestern companies doing the same, where they want to be in the hub of the Southwest, not be in California for tax and regulatory and labor law reasons. But also, one of the key things that I observe is, can companies go to Southern Nevada, Vegas, Reno, St. George, Utah? Yes, you can go there. The challenge that many of our clients reference is that if you're trying to scale up, over 100 people, really difficult to get manufacturing and technology experience people in each of those respective markets. Whereas a place like Phoenix that's large, there's not many other large markets in the Southwest. You have a strong labor pool that you can draw from, especially if you're trying to scale up to say 300, 500,000 people. And that's probably the key differential between the Southwestern markets, is ability to scale.
Well, look, Chris, I know we could go all day and we're on a little limited time here, but is there anything just that we didn't cover today that you think would be relevant? The audience well, and gosh, I wish we had time to do the Q&A and have more of a dynamic session like we normally do. But is there anything that you kind of anticipate folks wanting to know, or questions that you're getting asked that might be relevant before we wrap?
Well, the only thing I would say that's on the horizon that I don't think people are really talking about yet is as this unemployment pendulum swings from 3.5% to 4.5% over the next year is what we're projecting nationally. That's going to change the psychology, I think, of the freedoms for the employee that were supported through the COVID era. And I do believe that's going to drive a return to office, maybe not in its previous form, but an RTO that's going to have a different blend to it, but more people physically coming to the office. So the build outs are going to be different. But I think there's going to be substantive change coming. And so I think, we as people that work in the office segment, I think there's going to be substantive change relative to the way that people return, corporates return. The focus on creatives and ingenuity and new product building, I think, is going to be different coming out of this next cycle. And I think that portends another theme, which is what happens with these national corporate consolidations that have historically occurred in places like Phoenix and Dallas and Atlanta from higher cost markets. I don't know what that looks like fully yet, this kind of quote unquote shared services operation. I do expect that Phoenix, regardless, as the redistribution of headcount and chips occurs, I do think we're going to be in a position because we're going to have the product, we're going to have the labor force, we have the quality of life, you have weather, which doesn't hurt either, you have runtime in terms of redundancy of your grid, and you don't have natural disasters. You throw all of that in that stewing pot. I think companies are going to look at their portfolios, their real estate portfolios, their gray space, their underutilized space. And ultimately, unlike probably the last 10 years where employees were dictating so much on where they wanted to live, I think the corporates are going to optimize based upon cost differently. But I think that favors a place like Phoenix going forward as well. So in a pretty predictable business environment and political environment. So that's how I see it. Again, I wish I could be there with you and do more Q&A because that's always my favorite thing to do. But maybe,
we can
maybe
do it
next year.
Yeah, we could do this all day. So Chris, look, we'll wrap here. Thank you so much. You know, it's always a pleasure to get together, and hopefully we'll see you out at the course a little bit later. Thanks, Chris.
Sounds good. All right. Thank you. Take care.